Good evening. Just before I start, I do apologise. Some of the things that the President mentioned I will be going over again in terms of the depressing economy that we've all endured for the last 12 months. But it does begin to set the scene of our financial performance for the last 52 weeks that ended on the 27th of January. We all know that the world continues to be a very precarious environment, with headlines such as the UK closer to large-scale conflict than in many years being used by the press. Is it scaremongering? Is it the reality? Who knows? What we do know is the impact that that's having on the economy and us as retailers. The conflicts that are taking place throughout the world, you've got Russia's ongoing invasion of Ukraine, Israel's war with Gaza. While those the large-scale increase in commodity costs that we saw 2 years ago when Russia first invaded Ukraine have abated, we're not seeing wholesale commodity price cost decreases yet. Inflation's fallen from the high of 19.2%, a welcome fall from early 2023, but the UK is still seeing inflation of 3.2%, meaning that the households are continuing to see their disposable income squeezed and are generally less well off than in 2021. Food price inflation peaked at 15.7% during 2023, and this is making households' food shop remain high. This is playing out in our stores with smaller average basket sizes as shoppers manage their household budgets. The average basket spend is increasing, but the number of items in the basket continues to fall. The Bank of England base rate has now reached its highest level since 2008, adding even further pressure to household budgets, with many mortgage holders of today never having seen interest rates above 1%. And they're seeing more of their disposable income being consumed by the mortgage payments as their fixed rate terms end. All of these factors continue to have an impact on the retail landscape. Retailers are now seeing an alarming increase in retail crime, just to add to the list of woes, with the British Retail Consortium estimating that last year alone, retail crime cost retailers £953 million. Retail crime has always been a challenge for retailers, mainly through the petty shoplifting that we're all familiar with. But the scale of the problem is like nothing that has been seen before. To give you some examples, retailers are now seeing what is referred to as organised looting, where small gangs of 4 or 5 individuals enter the store and using pure intimidation clear the store of cigarettes, lottery, scratch cards. There are no weapons involved at all. It is purely intimidation by the number of people entering at one time. We've sadly been the victim of this practice on several occasions, and for the colleagues involved, this can be a traumatic experience. We regularly now receive reports from stores about large thefts. No longer is it the jar of coffee, the bar of chocolate. Recently, one store manager was knocked to the ground and severely beaten while attempting to stop what he believed to be a lone shoplifter, unaware that the offender was actually part of a gang. In another incident, a lone shoplifter made it quite clear to the store manager that if he tried to stop him, he would be stabbed. Our colleagues are facing those challenges every day. No individual should have to come to work and face these sorts of behaviours in the line of serving their communities. As such, the Society welcomes the recent changes in the law, making it an offence to assault a retail worker, alongside the government's commitment to fight retail crime. Only time will tell if these changes have an impact, as even with solid evidence in the past, we are seeing the police failing to attend incidents and apprehend the suspects. The retail industry continues to face a multitude of pressures, including the continuation of an unfair business rate system, a broken apprenticeship levy system, on top of the general economic challenges. Britain has been referred to in the past as a nation of shopkeepers, but if the retail industry continues to be the go-to place for government to raise cash, the nation's high streets will continue to wither and die. In 2023, according to the Centre for Retail Research, there were a total of 10,494 store closures in the UK, resulting in 119,405 job losses. The high streets and the retail centres of the UK are shadows of their former self. And while charity shops do excellent work and help the sustainability agenda, they have failed to offer the diversity that a vibrant high street needs to survive. Throughout the year, at the forefront of the board and management's mind has been the cost of living crisis and how we can stay true to our founders' principles of adding value to members in very difficult times. We have been supporting our colleagues and our pensioners through double discount Fridays, granting them 20% discount on their food spends to help ease these financial pressures. In addition, our members have told us in the past, through member surveys, that while the dividend is an important part of cooperative membership, they value immediate rewards and savings. To that end, during the last year, your society has run 10% off for members on food spends on Wednesday afternoon in selected stores, and in a number of stores, members receive 10% off Monday through to Friday on their spends. Through these immediate reward offers, our members have saved a total of £230,000. We believe staying true to our roots and to why cooperatives were set up originally. It is against this backdrop that we present the financial accounts for the year that ended 27th of January 2024. Given the challenges that we have faced in the period under review, I hope that as we move through the evening, that members will agree that we have managed to weather the storm and produce a reasonable financial performance given the challenges. I will take the meeting through initially the results, highlighting the key areas and providing background behind the numbers where necessary. Before I do so, I think it's once again important to take a few minutes to recognise the contribution of our stakeholders in being able to present a set of accounts that show a good level of year-on-year improvement at the operating level. Every colleague has played a part in the year's performance, and it's fair to say that without their continued commitment and efforts in challenging circumstances, we would not have been able to present the performance that I'll be outlining shortly. All of our colleagues in every one of our trading businesses and in our support functions have played a part in making the financial year a success. Turning to other stakeholders, our investing members have also continued to be extremely understanding as we continue to manage the Society's share capital through the Society's rules by limiting the annual withdrawal amount and requiring 90 days notice on withdrawals. The continued loyalty and understanding of these members is much appreciated, and their continued investment allows the Society to continue to invest in the business. To summarise the performance in the last financial year at sector level first, the food business, excluding fuel, bill payments and lottery sales, recorded an increase in gross take-ins of 4.9% compared to the previous year. While in more normal times a 4.9% increase in turnover would be a cause for celebration, the increase was purely inflationary, while the volume of products that we sold in the year fell by 4% compared to the previous year, reflecting consumers reining in their spend. At last year's meeting, I described the plan to market our stores as more than just a shop, which in essence is an awareness campaign around the services that we continually add to our stores to make them a one-stop shop for the convenience needs of the community. From the increased food-to-go focus, the parcel collection and drop-off services, with now some big courier companies being seen in our stores, Amazon, Every, InPost, for example. We have continued to roll these services out to stores where there is a demand, and this adds value to members and customers, hopefully driving footfall. We have seen the success of this strategy in a number of stores, generating some encouraging turnover increases when combined with exceptional retail standards and service. During the year, we made the difficult decision to dispose of our store on Long Road, Canvey Island. The store had been part of the Society's estate since 2000, but in the last few years, a trading loss had been made by the store every year. Following efforts to try and reverse the trend, we had to accept that the store was no longer viable for the Society. The store was sold to an independent retailer in November of last year, protecting the jobs of all the colleagues employed at the store. Trading profitability in the food business grew year on year by 80% compared to the previous year, representing a solid improvement in the Society's core business due to the focus on margin management, operating standards and operating cost control. Department stores continue to be one of the Society's biggest trading challenges, and in 2023, gross takings in the department store business declined year on year by 4.2%, as customers continued to battle with a cost of living crisis and cut back discretionary spend. Trading losses in the department stores increased in the year by 8%, totalling £490,000. The performance of these stores continues to be of concern to the board and management, and work is underway to reduce the store footprints to reduce operating costs and in turn the trading losses, while a long-term solution to eradicate the losses can be identified. The board and management continue to explore all the opportunities for reducing these operating losses to ensure that Society's profitability is not undermined by this area of the Society's retail offer in future years. Our travel business recorded a decrease in gross takings of 4.4% compared to last year, with the business being plagued by recruitment challenges, which meant restricted opening hours in both branches for a number of months. We now have a full complement of colleagues in the travel business, offering the level of care and service to our members and clients that we have been historically known for. As a result of the challenges, the business saw trading profit fall by 39% compared to the previous year. Turning to funerals, gross takings in the year increased by 2.2% year on year. The new funeral home in Basildon that was opened in 2022 is now beginning to establish itself, and while a cold start in the funeral business does take time, the trends are now becoming encouraging. Staying with funerals, in November the Society relocated its Ingatestone funeral home from 47 the High Street to Spread Eagle Place, adjacent to our food store. We had excess space in the food store, and as the lease of 47 High Street had expired, it made sense to take advantage of reducing operating costs and sweating the space occupied by the property that we occupy for food. Full-year trading profitability in funerals fell by 23.7%, representing the additional costs of the new branch and the increased operating cost base, i.e. energy, personnel costs, etc. The funeral industry continues to be challenging, with falling death rates in our trading area and the calls for regulation on the back of high increases in prices, and latterly the legacy funeral directors scandal is making funeral business harder to perform in. Finally, our rental income from our investment property portfolio decreased by 1.14% year on year. Looking at gross takings, total Society level gross takings, as the President commented on earlier, totaled 107,742,000, an increase over the previous year of 1.47%, or 1,558,000. And that reflects the many challenges that I've highlighted already. As members can see from the slide, the Society is operating below the pre-pandemic year of 2019-20. This is due to the fall in volume in food stores, with volume being affected by the change in shopping habits brought about by the pandemic, following that the cost of living crisis. Fall in volume in the food business is not just a Chelmsford Star issue, it's an issue that we are seeing across the cooperative movement. In our department stores, we saw the Arcadia Group going into administration during the pandemic, which meant we lost a large chunk of our turnover and income from our Braintree store. And the drop in sales of big ticket items in department stores is also proving a challenge. Our gross profit or income increased by 2.01% year on year, reflecting the improvement in the management of gross margin, which is absolutely essential in the current environment. Operating costs increased by 2.85% year on year. The main areas of operating cost increase were personnel costs, which is a result of another high increase in the national living wage in April 2023. Utility costs, primarily electricity, increased by 18.36% in the year, in line with the continued pressure that the UK saw across utilities last year. The cost of distribution, the amount that we pay to the cooperative group for delivering goods into our food business, continues to increase year on year. And while we sold 4% less products in the year, the total cost of distribution increased by 0.91%. This is a result of the logistics network for the movement becoming more expensive to run per case as the volume across the movement falls. Finally, given that most suppliers are passing on their increases in labour, fuel and utility costs, we believe the Society did an excellent job of controlling operating costs to protect profitability. Turning to operating profit totaled £522,000, an increase on last year of 703%, and a performance that the Society is pleased with after the challenges encountered during COVID and the subsequent year. While the year-on-year growth in operating profit is encouraging, the trading environment remains extremely difficult, and the cost pressures are continuing, and the Society is far from taking for granted that this level of performance can be counted on every year. Members will note that the revenue account contains some exceptional income of £46,000. The income is the result of the proceeds of the sale of the food store in Canvey Island, referred to earlier. However, there are also some exceptional charges, which are the costs of exiting the funeral unit at 47 High Street in Gatestone, and also a provision for surrendering one of the 3 units that we occupy on Gloucester Avenue, Chelmsford, where the lease has expired and we no longer need the space given to us by that extra unit. And if you frequent Malsham Lodge store, you will have seen that we have refitted the store and condensed our space down with no loss of real offer to the customer. At the retained level, made a retained loss in the year of 197, being heavily impacted by the deferred tax position. The deficit before tax was £85,000, an improvement year on year of £297,000 or 77.74%. Touched on earlier by the President, the annual accounts show that at the end of the financial year, the Society had debt totaling £165,000, a level equaling that of last year. Finally, with trading continuing to be tough, it's important that we ensure that any capital expenditure projects are directed towards areas that will produce the longest return and keep the level of net debt low. So, happy now to take any questions on the accounts.
Thank you very much. Malcolm Wallace. Actually, my questions also touch on the annual report as well, but if you can bear with me. So 3 questions. First of all, in the annual report on page 9, it refers to young people. Could you just elaborate on that a little bit, please, on how often our young people meet, the relationship with Essex and so on, and a little bit about their work. Also, do the police ever tell you why they don't respond after there's been incidents? And finally, I've noticed over the last year that the Co-op's Fair Trade chocolate, its own brand, has been, well, first of all, I haven't seen it for some time, then it's come back again, and I think the range has changed somewhat, but we're not getting, I don't think we're getting the full range of chocolate. That may well be that they've stopped doing it nationally, or it could be that we're not supplying it. But if you could just elaborate a little bit on that. Thank you.
I'll answer the police question and the fair trade, and I'll ask Kevin to answer the young people one because he's involved in that directly. The police, to be fair, it does vary by area. Our security manager has quite a good relationship with the police force across the trading estate. Where we can get answers, we tend to, but it's a bit hit and miss. You can ask the question, you might get a response. So to give you an example, the one that I cited about the manager being beaten up, at the time of the incident, the police attended. A member of the public had witnessed it and had got the registration number of the car. The police then confirmed that that wasn't reported lost or stolen. So they believed the offenders, or suspects should we call them, had used their own vehicle, which is why they were so violent. Now, my view, and purely layman's point of view, is you've got the registration number, it's not stolen. Surely it's as easy as going knocking on their door. No. They then turned up, if I'm right, a couple of weeks later, did the same thing in another store. Nobody was injured, but did another theft using the same vehicle. Now, our view is, you've got all the evidence, you've got a witness statement, you've got a guy that's been beaten up, you've got a registration number, you know the owner. How hard can it be to nick them? That's, yeah, I'm not a politician, as much as some of my presentations sounded like I should be a politician. The country's broken, isn't it? The police are turning and saying they haven't got the resource. So we're doing what we can. All we need to do is make sure we can package the evidence and go, there you go. If they don't do anything, then we've got our hands are tied, which is frustrating because when you do, you come to work in the morning, you hear about people being threatened to be stabbed or being beaten up. You just think, well, what can we do? You feel completely useless. So we are doing everything we can to try and make people safe.
Is there any way that members can assist at any stage of this, or
I think
if they're at the incident, that would be helpful.
yeah, I mean, I think it's a big step forward that the law has changed. Yeah. That it is now a crime against a specific crime against retail work. Yeah. What we now need to see, as I said earlier, is we've got to see that enacted. But certainly, I think if there's anything else, there was petitions around that were issued. I think what we could do in future, as much as we publicise those to staff, perhaps we should publicise those to members as well. So if there is a petition around retail workers' rights protection, then let's get that out to members. The more votes, more names on those petitions, the better. Fair trade chocolate, I believe this is down to. We obviously buy, as many of you will know, through the cooperative group. So we belong to a buying group called Federal Retail Trading Services, which all independent societies belong to. Along that company buys in the buying services of Co-op Group. A piece of work was done 18 months, 2 years ago, around looking at the number of products that Co-op convenience stores stock in comparison to the competition, the Sainsbury's locals of this world, the Tesco's Expresses. What they found is actually our business is more complex than it needs to be. So we're stocking far too many products in comparison to the competition. What that does is adds complexity and cost right the way from the supplier right down to the store. So it's a big piece of work, and they rationalised the range and took loads of products out. So I think that's where initially you would have seen a lot of that range disappear. Then there was a lot of feedback from independent societies like ourselves going, well, hang on a minute. You've taken out some core lines, you've taken out too much Co-op brand on this category, we've seen sales going down, so they started to put stuff back. So I think that is why you've seen, loads go out and then some gradually come in. But ultimately, for us to be more efficient and productive through the whole value chain from supplier to store, we've got to simplify it. When you look at our business, we have a lot of products sitting on shelf that, what's one of the birds, gather dust. So in a small store like Melbourne, as an example we were looking at recently, 20% of the volume of white wine we sell in there comes from just one product. So there is a lot of, we call it dead stock out there. And I think Group have realised that and said, okay, so if it's dead in the store, it's dead in the warehouse, it's taking up picking locations, it's creating cost. How do we take that out? So hopefully that gives the background on that. Mr. Bennett, if you wouldn't mind.
Hello, Mr. Wallace. So the question, if I'm right, is our links with young people. Is that correct?
Yeah, how it operates, the Essex side of it as well as our youth group.
Okay, so there's kind of two main approaches. We've got a lot of links still with schools through Community Fund and our community card groups. So we deal with them on a one-to-one basis, if you like, with donations and assemblies and things like that. We also work quite closely with Council's Youth Services. They have a group called the YEA, the Young Essex Assembly. That is a group of youngsters between the ages of 14 and I believe 21 that have been elected by other students, other peers, and they meet on a monthly basis. Now, a section of that YEA is called the Cooperative Youth Board. So they, as part of their regular meetings, they discuss youth-related matters. I attend either online or physically at the meetings, maybe once every 2 months. And they have lots of fingers in lots of pies, but they're very keen on sustainability, mental health, reducing knife crime, things like that. So we have a dedicated group of youngsters that have been elected by other youngsters that are working with us quite closely via the youth board. Does that answer your question?
Yeah, thank you very much.
Thank you, Kevin. I think that the youth question is one that will never go away, and I think let's just look around the room, and if we did a poll of the average age, it's probably not as young as we'd like it to be on youth. It's something that the movement as a whole needs to grasp. We need younger members. They are the lifeblood, ultimately, of tomorrow. And it's something that we regularly discuss, and we still haven't got the silver bullet as to how we attract more people of that younger age. Any other questions? Okay. So we're now, believe it or not, a quarter of the way through the new financial year. So given that members are obviously present, it makes sense to give a bit of an update on how we're performing in the first quarter. It has been extremely challenging for all the reasons obviously I outlined earlier in terms of last year. Those trends are continuing. Our gross takings on a like-for-like basis have decreased by 1.8%, with only department stores and the travel business generating growth, as you can see there on the screen. Department store growth, you can see, is coming from our concession partners, with our own bought trading slightly down year on year, only marginally. Our core food business, which is everything excluding the pay point and lottery, has recorded a decrease of 1.4%. year on year. That's reflective of the lower footfall to the stores, the lower average basket size than we'd like to have seen and have seen historically. The services element, the pay point and the lottery is down by 12.1%. That's a trend that is now being seen across the country, and you may have noticed in the press that the operator of the National Lottery has changed earlier this year from Camelot to Allwyn. And they have reported that they're 15% down on the lottery year on year. So we are performing slightly better than the overall lottery market, but that's still a sizable amount to be down year on year. Cost of living crisis continues to have an effect as customers are driven to the discounters for the savings. The weather hasn't been particularly kind to retailers, and we always like to use the weather as an excuse. With April being a complete washout with 50% more rain than usual, if you've obviously seen the Met Office statistics. All of that, it sounds silly that people don't come to convenience stores as much when it's cold and wet, unless it snows, and then they flock to the stores to stay local. But when that weather is sort of middle of the road, we just tick over. Fuel turnover is 0.5% lower than last year. That is purely driven by fuel price deflation. The volume of fuel that we've sold in litres is up 6% year on year. Department store business currently trading up year on year by 2.4%. As I said earlier, that increase is being driven by the concession partners in both fashions and footwear. Travel is really flying. It's got off to an exceptional start to this year, recognising that obviously we did come from a low start because of our staffing issues last year. Gross takings in travel have grown by 25.6% year on year, with both the holiday bookings and the currency sales recording growth. Funerals business is showing a decrease in gross takings of 9.3% against last year, and the number of funerals conducted is also down year on year. Finally, property business has generated a decrease of 4.2%, mainly due to short terms of empty flats as tenants move out and move in. It's quite clear when you look at that at the end of the first quarter that the year's going to be tough, with trading difficult in our core business and the continuing increases we're seeing in operating costs. So national living wage was again 9% increase, payable from the 1st of April. Utilities, it's a little bit easier than it was last year. We're not seeing the same level of increases, but we're not seeing it go down either. So that's an update for the first quarter of the year. Just touching on looking forward, earlier this year the board and management started looking at the strategic plan for the next 3 years. And while it's too early to be able to share any detail around the plan, the board have approved the revised vision and mission statement that was worked on together by the management and the board. And that's what will be used to guide the society's strategies over the next 3 years. So you can see on the screen there, our vision is to be a successful cooperative business to deliver value to our members and the local communities we serve, being guided by the sustainable and commercially sound principles. And then the mission will achieve our vision by delivering value to our members and customers, putting cooperative values and principles at the centre of everything we do, making our businesses an integral part of the community, being a progressive employer for our existing and future colleagues, and generating opportunities for sustainable growth. So that will be something that will be published regularly now. You'll see it every year in the annual report, and the strategic plan for the next 3 years will sit off the back of that. So hopefully when we meet next year, we'll be able to share the detail around the next 3 to 4 years.